Hi, everybody. Welcome to the latest Carson's Take 5. Ryan and Sonu. Sonu, it's been an incredible rally. We've talked a lot about, why we thought stocks would go higher the last couple of months. And, thankfully that's happened. But this week we're going to talk about maybe some potential risks. And we're titling this one, What Could Trip Up the Bull? I was on CNBC the other day, and they started asking me some questions like this. And I gave some answers. I got through it okay. But, again, S&P's up the time we're doing this, maybe 2% on the year, not that far from an all-time high, about approximately 20% off those lows in April. Heck of a rally. We're all thankful for that. But what could trip things up over these summer months, you think?
I mean, I think the cliched answer there is tariffs, obviously. But I think everyone has some sense of, we see the... maybe it's not the light at the end of the tunnel, but we know that, okay, tariffs may be here to stay. We'll figure out a way to deal with it. Maybe it's American companies' dynamicism that deals with it, or they figure out some sort of workarounds, right? China's not sending magnets to GM and Ford in the US for putting into the engines. So maybe GM and Ford, I just saw a report that they're going to make the engines in China and then ship the engines, because that's allowed, right? If the magnets are already in the engine. So all this to say, companies will figure out workarounds, right? But I think something that's probably not talked about is the fact that, the labor market is not broken. Inflation maybe could be trending higher, especially if goods inflation goes up on the back of tariffs. And that means the Fed may not cut interest rates this year, right? Part of the bullish case coming into the year was two things, right? We knew the threat of tariffs existed, and that's now manifested. But the other side was, elevated interest rates. That's still with us. And the bullish case was, maybe the Fed will cut, along with tax cuts. Now, tax cuts are going through Congress. But what if the Fed doesn't cut? I think that's a very realistic scenario. The Fed may not cut this year.
Yeah, so that could upset the apple cart, as they say, potentially, with this rally we've had. You think about other things that are out there. I mean, I say a lot of our potential risks, are the same that you hear about all the time. Market in the U.S. is a little bit pricey. We have had a huge rally. We've got optimism over trade and tariffs. Well, that could, with one tweet, potentially come crashing down. Now, hopefully it comes back just as quickly. But those are things that are real. And you mentioned the labor market, and we'll see by the time people watch this, I guess we'll probably get the monthly jobs data. But we did see a little bit of a spike up in initial jobless claims. I think it's safe to say there's some cracks out there. I know you look at the consumer data we get from the Fed, keep this real simple. Like the number of late payments on autos and potential mortgages and things, the student loans, they are going higher. I mean, now they're not like massively high, but there are clearly some cracks that are out there as it pertains to the consumer and potentially in the economy. Housing data, my goodness gracious, housing data has been very, very weak. We all know why. Higher yields, higher interest rates across the board has really hurt that industry. But still, there are some potential problems. I'll put a bow on it and go back to you. I'm still pretty optimistic, right? We're still pretty optimistic. I mentioned this, on TV. I said, listen, maybe the biggest potential concern out there is people just don't buy into the fact that we hit a major low and stocks want to go higher. I mean, globally, stocks are going higher. Right. U.S. probably plays catch up. Hopefully, most listeners to this weekly video that we do have not kind of listened to all of the bears that are out there. So there's still likely some upside. But that's why we diversify, right? When in doubt, diversify it out. Is that one way? If we're wrong, let's say, quote unquote, we're wrong, and the market does pull back 15% over the next, 4 months. I mean, tell me how a diversified portfolio will help us in that situation.
No, exactly. I mean, you never want to put all your eggs into one basket, even though, you look back over the last decade and a half, that seems to have worked. If you put all your eggs into the U.S. and especially the U.S. tech equity basket,
big cap tech, yes.
Exactly. Yeah. That was the only way. So it's almost like everyone's forgotten about diversification. But, when there, like you said, there is a lot of uncertainty out there. But when you have a lot of uncertainty, you don't want to make any big bets one way or the other. Yeah, diversify away, whatever risks you can. And international equities is one way to do it. I'm just looking at my screen, like the MSCI All Cap World Index, excluding the US, is up about 14% year to date.
Wow.
Right? The S&P 500, this is through the end of May, the S&P 500, like you said, 1 to 2%. Right? So there's a global, I would argue, a global bull market in equities. It's just that, we've had 2 strong years for the S&P 500. Maybe it was time to take a breather. Yeah.
Yeah, the bull got a little tired. Didn't trip up, so to speak, but the bull Bull got a little tired, and I think that's perfectly normal. We've talked on these very videos where early in a post-election year, you get some weakness and volatility. The past 20 years, first quarter has been weak. When you're up 20%, the previous year, the first quarter tends to be weak. So it made sense that we hit a little indigestion this year. No, we did not see a near bear market. We also didn't see Liberation Day on April 2nd being as aggressive as it was. But the reality is it happened. But fortunately, stocks have bounced back. So no, we're kind of at the end of the road. Any final bits of wisdom, I guess, about what could trip up the bull or maybe keep the bull going, whatever way you want to take it?
I think we muddled through. And that's not, muddling through is not a bad situation, right? Muddled through, when we started the year, we thought, stocks could do anywhere between 10 to 15%. It's still probably in that camp. By the way, if you don't have a recession, most years where you don't have a recession, stocks actually do much better than 15%. So we were actually a little more on the conservative side because, as you and I have talked about, expecting stocks to, pull back at least 10, 15%, or you got something slightly more than that. Sure. But then, like you said, Liberation Day was, very unexpected. Right. So, I think we muddled through, but that doesn't mean things pull back. That could still be, the S&P 500 finishes the year with 10 to 15% or so. And we could see a lot more volatility on the way, especially as the market grapples with the fact that, maybe the Fed doesn't cut. But then remember, as we go into fall of this year, we're going to be thinking about 2026. And there's potential for the Fed to cut in 2026, assuming the inflation problem is behind us. And of course, the Fed may cut if the labor market breaks. So right now, we're not seeing that. We're not seeing the unemployment rate spike up from what's now historically low levels. But that's something to keep an eye on.
Yeah, I'll one-up you there when you talk about years without a recession. Just in general, years, the S&P 500 is positive. If it's in the positive bucket, it's up 19%.
There you go.
When it's down 14% average. The S&P is up about 3 out of every 4 years approximately. So just be aware that, these big gains that we've been seeing, I know it feels kind of, 20% a couple years in a row. Now, we're not calling for 20% this year. But again, double-digit returns this year made a lot of sense to us. So with all of that, this was your latest weekly Carson's Take 5 with Ryan and Sonu. What could trip the bull up? There are clearly risks. There are clearly concerns. Maybe a short-term trip. But if he does get tripped, we think he's going to get right back up and keep on going for the rest of this year. We'll keep talking about it every single week. See you right next time. Thank you.